I wanted to get you in here because this really seems like a good natural break for any investor. We're at the halfway point of 2019, and we're going to dip into the full mailbag because we get some great questions. But I am curious. This really does seem like a good time for any investor to just sort of take a step back and say, okay, it's in the midway point. How am I doing? Almost to the extent that it's possible, look at your portfolio with a fresh set of eyes.
Yeah, I like to do that 2 times a year. Now, because I'm an investing nerd, I do it daily. But I don't recommend that for the average person. No, but 2 times a year is a really nice time. You can step back, you take a look at your portfolio, and you just need to see a few things. Like sometimes, for example, cash can have accumulated. For example, I put a piece of my 401k into cash every month, and then I deploy it. But sometimes I forget, and the cash can build up. And you really don't want cash sitting idle unless that's a strategy that you're particularly pursuing. So you want to keep an eye on your cash balance. You want to see if any positions have become oversized, because first of all, it's a good problem to have. It probably means something is just skyrocketing to the moon, and it's just killing it. But you may be unhappy with how big that has become as part of your portfolio, the allocation size, and perhaps it's time to pare back. A third thing is perhaps you've been hanging on to a loser a little bit too long in the hopes that it would come back, and hope is a bad strategy when it comes to investing. You have to have a good reason, a good rationale. We always suggest writing down your investment thesis. It's in the case of a loser that you're really unhappy with, it's always good to go back and revisit your investment thesis if you have written it down. So those 3 things: maybe a company has become too large, maybe a company is just not turning around as hoped, or maybe cash is accumulating. 2 times a year. Perfect.
And 2 of those things, I think, tie nicely into something we talk about from time to time, which is having a watch list. It's great to have a portfolio diversified with a bunch of stocks, but you also want to have a few stocks that are on a watch list so that if the cash balance builds up, or you do look at something and say, you know what, I've looked back at why I bought this company. The thesis is broken. I'm going to get rid of this. Maybe you time the sale. If it's at a loss, you time it to be advantageous from a tax position. But yeah, that's really why you want to have a watch list.
I love that idea for sure. And don't just take your watch list for granted. If you put a company on your watch list a year, 2 years ago, don't just assume nothing has changed. Give it a once over twice to make sure that you still like that company and your thesis, whatever it is, still holds. But I always have a watch list. I'm always, hoping to buy that next thing and having enough cash to buy that next stock, or as you said, maybe selling something and replacing it with something better. Idea being, you always want to have your favorite stocks in your portfolio at any given time, and this is the perfect time to make sure that's the case.
What is the first number you look at when you're looking at a company? Because, and let's just put aside the stock price, because I think you can't help but see that number just when you type in a ticker. For me, it's the market cap. That is the first thing I look at, because one of the ways I think about investing for the long haul is, what is the market cap today? What do I think it can be, particularly relative to competition, that sort of thing. So for me, it's market cap. What is it for you?
Market cap is definitely, top few things. I would just, I can look at a glance of a tear sheet and just look at a few things like, boom, right? Is the company profitable? Is there net income? But even more importantly, I'll look at a cash flow metric like EBITDA. Are they producing cash flow? What's the market cap? What size of a company are we talking about here? So perhaps what's a revenue number look like? And those 3 things right there can tell you a lot about a company.
Before we get into the mailbag, looking ahead to the second half of the year, is there anything in particular you're going to be watching, whether it's an industry, a particular company, anything?
This may not be satisfying to many listeners because it gets a little bit in the economic weeds, but for macro really is what I'll be looking at for the second half of this year, specifically interest rates and GDP or economic growth, because that's going to tell me a lot about what I need to know about individual companies and how their growth rates are looking. And if God forbid, we're going to fall back into a recession, which it does happen. So, sometime we will. But how's that all looking? And kind of alongside that, how's the trade war situation shaping up? Are we going to, 6 months from now, are we going to look back and be, wow, this has been a real thing? Or will we say that was just a blip and it's gone? So mostly macro things for me.